share a little bit about IPVision and today's discussion leaders. IPVision is a leading research and strategy company for technology-focused businesses and the legal and financial communities. Originating at MIT, we're focused upon helping clients achieve improved results and decisions through the use of analytics and evidence-based processes in the IP field. Joe Hadzima, co-founder of IPVision, is a recognized leader in the technology, legal, and MIT community. He's a senior lecturer at the MIT Sloan School of Management, practiced law as chair of Sullivan & Worcester's high technology practice, where he literally helped found and bring hundreds of new companies to fruition. And he was a founding member of the MIT 10K, now the 100K Challenge, and chairman emeritus of the MIT Global Enterprise Forum. Alex Butler, IPVision Executive Vice President, is a long-standing leader in the IP community. He's worked with leading companies and counsel for more than 20 years to better understand and manage their strategic IP priorities. In addition to a corporate strategy and management background, Alex's systemic approach is recognized as a path to value by clients. Prior to joining IPVision's executive team, Alex held domestic and international management positions with Thomson Reuters and IHI, among other firms. Now to start our webinar, I will pass it off to Joe Hadzima. It's all yours, Joe.
Thank you, Joe. We should learn not to have two Joes in the same company, so that's a separate discussion. In today's session, we're going to be focusing on the many changes underway and the impact of big data and analytics on companies and their outside counsel. We are in the early stages of this process, and we will discuss specific examples, key learnings, and important recommendations. In brief, while cost is an important element of the client-counsel relationship, analytics offer far more and provide a unique method to build a broader and deeper relationship that adds substantial value to firms and their clients. We're happy to say that participants on this call today include senior law firm partners and principals and some inside counsel interested in adding value to their company's IP efforts. Alex?
Welcome again. This is Alex Butler. We appreciate your joining us today. As indicated, we'll be providing insights into how leading companies and firms are moving beyond first-generation research tools and analysis techniques to answer larger, more strategic questions.
We know that senior management is focused on the primary objective of creating lasting enterprise value. We're talking about the C-level executive suite. As we know, in the last 3 or 4 years, intellectual property is becoming of increasing importance to management as these issues continue to elevate in the organization and move from tactical questions and actions to strategic decision level of discussion. Company officers at this level tend to ask broad, open-ended questions such as, how is our relationship with our customers? How are we adding value to them? These broad questions create opportunities and require a response. The challenge in the IP area is that there's a recognized gap between the importance of IP and the ability of decision makers to evaluate and understand the important details to support their decisions. To use finance as an example, we understand that conversation between financial specialists, CFOs and accountants, and management and directors is well versed with sophisticated metrics and the ability to drill down into specific areas of companies' assets, liabilities, and performance over time. Not surprisingly, finance, inventory, marketing, and sales drove these initial use of analytics and provided a clear path to increase performance for companies that use these over companies that did not. An MIT Sloan Management Review study series of articles in conjunction with IBM pointed out that top performers use analytics 5 times more than lower performers. We're starting to see leading companies using analytics in law and IP to help create a similar ability to support their tactical and strategic requirements and to improve discussions and decisions in their companies. From our work at MIT and research by leading firms such as IBM, SAS, and Sloan Management Review, there are many insights into how companies use analytics to address large data sets and big data problems. There are multiple techniques and methods available. The key imperative here is that while it's possible to learn how clients are using analytics, a topic that both Alex and I are happy to discuss in detail at any time, it's far better to leverage those same techniques to build value based on the unique role and perspective of outside counsel. Thinking back to my days as practice chair for one of the company's leading corporate law firms, I recall how quickly the client-counsel relationship could change. No matter how technically demanding the legal work was, it was increasingly being viewed as a commodity, if not accompanied by strategic input. Those firms that were able to combine the legal work with strategic inputs to help clients understand how the legal work fit into the mission of value creation, those were the firms that were able to establish longer-term and deeper and more profitable relationships with their clients. The pace continues to accelerate, and as we know, knowledge is one step in the journey. Action moves you further along.
Thinking back 10 to 20 years ago, I recall working with then pioneering companies to implement the first wave of legal management systems. Those actually grew into electronic billing, electronic discovery businesses. Even today, most headlines regarding the use of analytics in the legal sector tend to focus upon cost management. Those easy wins, so to say, through improved counsel management and the ongoing conversation and discussions around fee arrangements, fixed fee, contingency, shared burden, et cetera, continue to dominate the discourse when people think about analytics. In the IP space, we see this as, originally as efforts to reduce costs per patent, maintenance costs, prosecution costs, and the like, and for improved efficiency and time, cost of patent searches, decisions, opinions, and the like. Now, I see this really as the first ripple of what will likely be a tidal wave, if not a tsunami, of technology-enabled capabilities for counsel and the profession. Well, hindsight is certainly 20/20 on the growth of cost management. The indicators are extremely clear that more and more companies see value and quality as attainable results in looking at how to improve their legal processes, particularly in the IP space.
As I started out mentioning, the importance and visibility of IP at senior levels of the corporation continues to build. We and our legal clients now routinely field questions from business unit leaders and help those inside counsel respond to new demands being made upon them. The Wall Street Journal effect, as I call it, of large transactions such as Nortel and Motorola, the rise of non-traditional patent holders, NPEs, trolls, and the like, high-stakes litigation and disputes, and industry consolidation are initiating discussions about patents that move far beyond how much do we have or how much does company X have in this area. As the discussion rises in the organization, again, the types of questions change. C-level management tend to ask the big, open-ended questions. What is the relationship with our customers? How are we doing with our customers? What does it mean if company A buys company B? These are the kind of questions the people that are now focusing on IP at the highest levels are trying to ask in the IP space.
Traditionally, the IP space was dominated by the tactical question, the reality that there was generally a small number or a moderate number of patents that could be managed through relatively simple tools or capabilities. As the volume has grown, the traditional tools that were used to design and characterize and find data answer simple questions. To look at Joe's example, we have 30,000 customers, we have 500 patents, we have 5,000 patents, we have them in 5 countries. Those 500 patents are 400 in the U.S., equivalents in Europe and Japan, Korea, China, and such. Well, accurate. That's just a first step in the process, and they do not answer the bigger questions regarding either customers or IP or corporate strategy. Now, here are some examples of some of the first wave of analytics. These generally date back 10, 15, 20-plus years in age. Now, while the perspective changes from one visualization to another, be it a trend or a clustering or a chart of one type or another, the underlying information simply points to 1, quantity, 2, a trend, and 3, initial attempts to characterize a what. Interestingly, the what drops that critical perspective of time. So you miss the questions of the relationships and the what-if capabilities, and again, that position or quality of, what is the actual value or what's the strength or weakness and opportunities that might be present.
Yeah, and this slide sort of points that out, that patents really are one big data problem. There are a lot of them out there for any given company, and the pace of acceleration in filings and issuance is increasing. Decision timelines for dealing with these are moving quickly. We know patents are heavily detailed and they're complex, making communication challenges, as I mentioned there, time pressures to make strategic decisions. And it's been expensive to analyze patents from traditional viewpoints because of the lack of the analytics that could be done to dig into the question. If we think back to those broad questions that the high-level management asks in the consumer space, when they say, how are we doing with our customers? Well, when you have a data set with information about your customers, the transactions, the customer relationship management systems out there, over time people are able to develop metrics that got to answer that question, such as net promoter scores or use of social media and customer satisfaction surveys to get at the underlying question. So we think there are opportunities here in the patent area to use data analytics that dig deeper into the data to start to answer the broad questions that senior management is asking. So if we think about, does this make sense? Well, the new normal is that data analytics and big data have moved out of the traditional areas of finance analysis into supporting everything from R&D strategy, business development, and product development decision processes. This is, again, from the Sloan Management Review study, looking at how leading performers use data analytics over time. So these are things that senior management are doing today and where they're getting good results and where they're feeling comfortable about the use of data and data analytics. So if you're a law firm working with clients that have IP problems or IP decisions to make, moving IP discussions and legal support into these decision screens at an earlier and higher and bigger picture level can only mean good things over time to you. The higher up in the corporation you go, the bigger and broader the budgets are to support these kind of questions. So this presents substantial opportunities for law firms, or threats if they don't respond appropriately. The question is, how can law firms capitalize on this opportunity? And I've asked Alex to pull together some specific examples from some of the work we've been doing with leading firms and corporate clients to give you an idea of what can be done today.
So in the first example, bearing in mind that management has that big picture view of companies' internal and external drivers, we routinely use this value chain approach to helping clients incorporate IP strategy into and in support of their overall corporate strategy and objectives. So this is not the fallacy that IP strategy drives the corporate strategy, but it's a supporting element to those broader corporate objectives. The IP question is about more than where the client-specific offerings reside in its value chain. Understanding the full value chain helps mitigate risk, preserve, and create long-term value. So if you think about this, a structured process can only certainly help. So understanding, where the client fits in its industry, who its suppliers are, who its customers and competitors are, be it a joint venture, licensing, and the like. As you map out those relationships in that chain, it starts identifying opportunities for risk and opportunities to craft and shape value over time. So in the structured process that we find works best for organizations and their counsel, first is to get a good understanding of the client's own portfolio. So this is certainly at a much deeper level than looking at the portfolio in terms of how much and where you have. But what are the important patents? How do they map into specific technology areas? Are they source materials? Do you have trade secrets and know-how? Where do you have patents that speak to end uses that may develop over the next 5 to 10 years as prices come down on components or different systems? The second is think about the value chain or chains that the client's actually working in. So oftentimes in a larger firm, you're looking at 2 or 3 discrete businesses. So understand each of those businesses at the macro level. Again, all the different players or patent holders we talked about. Think about the critical technologies. So this is understanding not just the IP that your client has or IP that specific companies or organizations hold, but think about how those technologies are developing over time and who owns relevant IP. So this is a broad technology landscape or a narrow technology landscape, to use sort of the buzzwords that come up. But those are structured reports or structured projects that are exploring a technology area to understand how it's evolving, and are there opportunities to capture or create value there. From those earlier reviews, the step 2, mapping the value chain participants and understanding the technology areas, invariably you'll find that there are needs or desires for management to get a better understanding of some of the evolutions that are happening over time. Now, in one specific example, we're working with a firm in the energy space, and through this process, they found some of their key customers were starting to develop patents that would actually restrict their own company's ability to create value and continuous technology development in a path that they were going over the next 3 to 5 years. So those long-term R&D plans were being influenced by people that were not in the traditional industry or competitors. So that it's important to think about where the company is going, not just what the company is inventing or creating. And then finally, this is very much a situational or context-dependent analysis. So with patents issuing weekly, industry consolidation, or failure of companies, depending upon the industry, there's a lot that happens. So being able to keep this up to date on a scheduled basis, we find is a critical competency of organizations, so that it's not just we've answered the one-time question, but we now have a way to say, here is where we are in December 2012. Here's what's changed between December 2012 and our next strategy review or our next review of a particular competitor or customer. This is an example of an iterative and structured process to walk through a technology area from broad to narrow down to specific companies and patent holders. We've anonymized the company names and the example, but the idea is that we want to be able to think about developing new insights and understanding of business performance based upon patent data, expert systems, and other methods supported by focused use of consistent metrics. So this is looking at past performance to help guide decisions in future business planning. Contrasted with some applications of analytics that you might see in the press or in reading about it, such as retail or web, the approach is really used as a process or an input for human decisions and expert analysis. So it's supporting a range of strategic and tactical decisions, such as R&D planning, corporate strategy, M&A, investment, capital allocations, and risk reduction. It's not looking at automated decisions or automated outcomes. In each of these areas, it's helping experts question the question is what happened, how many, how often, and where the problems are and what actions are needed. In an M&A context, we worked with a client that a very large company, several $1 billion in cash on the balance sheet, that had identified an international acquisition opportunity at a new technology market or a new technology space that they were seeking to enter. A very desirable transaction from the corporate strategy and finance perspective, because it would add immediate value to the share price, and all indications would add certainly a scalable business that they thought they could take from a few $100 million to over $1 billion extremely rapidly. In the initial due diligence, they engage us to go through this process to understand more broadly the technology landscape, because this was a new area or new field for them that they were not as familiar with. In doing this, we found that the initial acquisition target was actually at an IP disadvantage to a much smaller firm, about 5 to 10% the revenue size, certainly not nearly as attractive under traditional M&A or financial metrics. The smaller firm, though, had the fundamental IP in the space. So even though they're commercially challenged, the idea was, this was a way that IP was moved ahead of the traditional timeline or scenario in an acquisition process and changed the outcome with the acquiring company acquiring the smaller firm first for a much lower cost and control premium, therefore changing the dynamic when they came into the second conversation and the second acquisition, and as they were starting to consolidate the new technology area.
I make 2 points there, Alex. One is, I recall that project. We looked at 10 companies that they had identified as potential acquirers, and the ability to go through and do a fairly fast and cost-effective analysis of the IP situation in the industry is what allowed them to make that decision. And the other thing is, it became very clear that buying the smaller company, to make it more blunt, basically paid for itself by reducing the price for the larger company when the larger company understood that the smaller company had the key IP. So it was almost like Larry Ellison buying Sun in order to be able to bring the Java patent suits in mind. So it was an interesting one. My point is, without the ability to be able to do this quickly and over a large data set and cost effectively, they never would have had that great corporate result.
And I think the other important lesson learned from that process was that even though it was started with the corporate strategy function, it required this drill down capability that we've mentioned once or twice to actually get down into the specific patents within the portfolio of the prioritized firms, so that if the counsel could actually understand, the corporate counsel and the outside counsel could understand truly how important the IP of that smaller acquisition candidate and then actual acquisition result would be.
Okay.
So in another example, or third example, we've worked with corporate counsel and their law firms to help evaluate and improve the quality of a client's patent portfolio. And this is also, I guess, the flip side, you could use it to understand relative risk and performance over time. The underlying technique is to use an IPVision expert system to evaluate each and every independent patent claim in a portfolio. And this is summary level data, but the drill down certainly would be available. Then we characterize each claim for 2 perspectives. The first is trying to understand the relative broadness, or breadth, broad claims to narrow claims, and structural quality, is the language or were the rules of the road followed by the courts and the patent statutes to have claims that would stand up if a dispute or transaction or litigation were ever envisioned.
Yeah, this is an example. The kind of analysis we did here was taking the learnings that and technologies that were used in handling other large data sets in the big data set arena, and applying IP-specific metrics to, in this case, patent data, to gain high-level insights and perspectives. So this is an extension of tried and true stuff that have been used in other areas. As you can imagine, trying to do this manually would have been extremely cost prohibitive. They probably wouldn't have even attempted to do it.
Yeah, to dive into this example a little bit more specifically, it certainly supported significant industry-wide analysis of risk and M&A value. It is more tactically worked with some significant law firms to help evaluate portfolios of patent applications drafted or filed or issued to help elevate attorney development and to strengthen portfolio strength over time. So this is an idea where technology enables an exploration of performance that historically would have been difficult to do, given that 5 attorneys around a table looking at the same patent would have different approaches to considering that, so this becomes a consistent, repeatable way to prioritize the review or to structure the evaluation. One of the attorneys we worked with on one of these projects recently commented that he found it far better to have the sanity check and prioritization in advance rather than wait until after the client came to them with such results.
Yeah, actually, before we leave this slide, two things here. Without getting too much into the detail of the patent agent quality measures up there, the red lines, the ones from the left, are the percentage of independent claims in the portfolio obtained by the firm that were A or broad. And so the question management had was, well, why is firm G getting me such few and firm K is giving me such a large one? You can imagine, just if I were running a law firm, I'd want to understand how people would be perceiving, the work we're doing here. There's some answers to it, but it certainly provoked a whole level of discussion. The second point is there's a natural concern about whether you could algorithmically identify broad patents versus narrow patents and whether they had structural claim problems or not, or structure problems in the claims. And we tested that over and over again, that the approach does grab the ones that are important and doesn't leave any out. So there's a whole bunch of back channel things we could talk about on that, but interesting approach. Let's move on here. The other thing is, remember, we're talking about the IP visibility moving higher in the organization, and these high-level executives need to have communication in a way they can understand. We all know about the give me one-page memo, give me no more than 2 slides approach that senior management has. These kind of mapping relationships that we've been doing over time does tend to encapsulate this for senior management. Here, it's an example of relationships of a company's patents versus its competitors moving over time, and can be easily explained to the senior management people. It's often a challenge because, patent lawyers have to get the details really right to make sure everything's working, and so they tend to be more text-oriented, whereas the people at the senior levels tend to be more visual. So this ability to span communication over time over this is a useful approach. Other approaches, Alex, you had one you used recently. Yes.
Yeah, so we were talking earlier about mapping portfolios and the value chain. This is I'll borrow liberally from the Morningstar mutual fund diagram that people may think of. But this is taking an approach where we're actually taking a company and its technology platforms and product lines to map across its value chain. So 2 different perspectives, the value chain along the bottom, and then the technologies, platforms, and products on the vertical axis. And the idea is that then you plot where the company has its patent portfolio or patent families, and you can see, you can do this across a variety of metrics, such as, where do you have patents, where do you have seminal patents in the technology, where do you have your best claims or your best coverage. This very quickly starts identifying gaps or where you have areas of strength. And you can also then start plotting in where are we going to put our future patent filing focus. So it's a way to think about prioritization of patent budgets. It's a way to think about where you have strengths and weaknesses in your own portfolio. You certainly could do a similar exercise on a competitor's portfolio and have a comparison of my portfolio to a competitor's portfolio or supplier's portfolio. So, this diagram or this view with the drill down of each patent behind it, is used by a client and a counsel to drive, a series of patent filings. What we found with this client was that their legacy portfolio was historically in the components and some of the integrated systems. Their competition in the future value they were driving for was in the end use and applications where they had very little patent holdings, and actually their customers had patent holdings, and some competitors had some patent holdings. So they started thinking about how they could work with their R&D and their engineers and their attorneys to start crafting a more informed and stronger patent strategy on a going forward basis. So immense value to the partners managing that relationship, because now if they had a client that better understood where they were trying to go, and they were able to actually get much higher value patents in process rather than just doing quantity filings on some of the materials and components that the engineers were coming up with that really didn't align with the longer-term corporate objectives. The other interesting thing about this was that this was seized upon actually so widely within the organization that it's now part of the recurring update packet for the senior management team and the board of directors, because historically it was the communication of we filed X number of new patents, we've received wide number of new issuances. We have patents that we filed for this new technology or product that we've offered. And now it's actually come into a much more sophisticated conversation at a level that the board can understand.
Okay. So we're sort of back at that basic high-level management question: how are we doing compared to others? And the big picture question of measuring and managing your portfolio and your strategy. The adage, you can't manage what you can't measure, comes to mind. Now, the work we're doing today, you may think this is only for big companies, and in fact, we've got 2 Fortune 50 clients that have come on board in the last month, and we're doing some heavy-duty analysis on their big portfolios of tens of thousands of patents. But the case that Alex just mentioned with that particular chart was actually a company that had about 100 patents. And you might say with 100 patents, you ought to be able to figure out what you have manually. But that's not what management was interested in, and that's not what the board was interested in. They wanted to know, how do we stack up against all these other companies out there? And that you can't do manually. And this is a chart Alex prepared to help them understand that. So Alex, can you walk us through that briefly?
Yeah, so start with the big question, or the open-ended question that was asked, which is, we've invested millions of dollars in our IP, yet we have a smaller portfolio than our competitors. Why? How are we doing? We actually think we're spending a lot of money, and can we bring the budget down next year? So you have sort of the typical conflicting questions of, we have fewer patents, we're spending a lot of money, but we want to spend less and get more out of that. So in this evaluation, we knew that quantity alone was not going to be a sufficient answer. Management already had that information at hand. So it was really thinking about helping the client evaluate his portfolio and those of its peer firms or competitors based upon questions such as the position, quality, and strength to help provide an overall understanding of where things were. I'm not going to point out which company falls into each category, but needless to say, what happened was that the client company, well, they were company A, we can give them that, versus the company that had the highest quantity, had a much more balanced portfolio where they had earlier patents, broader patent claim coverage, higher quality claims. They had sort of the core critical technologies protected by their portfolio, where competitors that had the larger portfolio had played the quantity game. Lots of patents that were relatively narrow in scope, that were building upon or sort of adjacent to where the client's core patent holdings were. So if anything, they were actually, even though they had more patents, somewhat dependent upon where the client's portfolio was. So this certainly was something that sparked a new conversation between counsel and within the management team at the client to think about ways that they could further strengthen their portfolio, and then again also make, in this case, a decision as to whether they wanted to exploit their advantage over their competitor or not. So you could think of that as licensing or an infringement type analysis decision, or just status quo. So with that, I think we've given some specific examples, and think about going about 40 minutes. So
I hope we're not losing anyone. Would you like me to do a little quick summary, and then maybe we turn to Q&A?
I think that makes sense.
Okay, just in case we lose people. So a couple of points to make, just to recapitulate here. IP and IP strategy is getting attention at higher levels of management. These people think more strategically, and they typically have larger budgets. They're comfortable with the analytics and the big data approaches used in other areas of their business. We've shown you some data and analytics approaches that we've used to help address these issues in the IP space. And what we're finding is that the law firms we have worked with are using these approaches to, in one case, cement relationships with clients and move to higher level of visibility within those clients. And in other cases, they're using this approach to put together proposals to acquire new clients by presenting approaches that are not being advanced by the client's existing law firms. So there's both the opportunity and the threat. If you're the existing law firm and you're not onto this view of the world, you're at risk that somebody else is and are moving along. So we hope you found this interesting, and we do look forward to continuing what we view as a conversation with you on these opportunities. And we certainly welcome your comments and insights, and perhaps now your questions. So, Alex, what's the format here for questions?
Again, just given the number of participants on the call, the questions can be submitted via the chat function in the webinar panel. We actually do have a couple already. The first one was a question was around, you've mentioned drill down a few times. What do you actually mean by that? How would an attorney get access to the information? So that's actually a pretty good question. For those of you who are not working with IPVision at this point in time, we have a slightly unique model where clients can have access to a secure online patent analytics and search platform that we use to, one, allow clients to access reports that we've prepared on their behalf or project results. So if we've assembled a portfolio, gone through the diligence of understanding the M&A history of a larger corporation or an industry, mapped it out, identified a series of metrics, you'd be able to access a hyperlink in our report or our end presentations and drill down to the actual lists of patents, the underlying trend analysis, the underlying characteristics that we've provided on claims and the like, so that you could then, if you needed to, even print off a copy of the patent and read the specific claims or dive into it. That will also give you additional access to information such as international equivalents and legal status and families and things like that.
Well, they could actually read it on the platform. Yeah. The model, the interesting model of the report creates something, or it ranges from even a couple of slides that can go to senior management to a report underneath that with more details that can be used by other functions. And ultimately, all of it's back to the underlying data. So it's a good way to span that communication problem from the high level to, well, I want my people to check this out or work with you on that. We've made it very easy to do. So.
Then the second question was around sort of the time savings that we see. So you mentioned a couple times that we're working with some extremely large portfolios, and the time that it would take to do that manually would probably be almost insurmountable, or would take 6 to 12 months. What do you think the time frame would be to do some of the first pass reviews and then start drilling down into let's say a 10, 15,000 patent portfolio?
It'd be a matter of weeks. Often it's so we can generate the information faster and then can be digested. An anecdote there, hopefully not speaking out of school, we had a situation where a very large company had spent billions of dollars on IP litigation and licensing and acquisitions, and the senior management really said, gee, we're not really sure we got our hands around this. And they went to an outside law firm and said, we want a soup to nuts evaluation of our whole portfolio. They were happy to put a bunch of people on it, but unfortunately management wanted the answer sometime in this century, and that's where we got involved and were able to provide that data in a period of over a period of I think it was 4 to 6 weeks initially, and then it continued from there. So that over time they even said, well, let's start looking at our competitors. So we were talking hundreds of thousands of patents were able to be analyzed and presented in context. So that's the power of the algorithm, I guess. So,
yeah. Just to build upon that, certainly for smaller portfolios or more focused reviews, results can often be delivered in single-digit number of days,
right,
or almost instantly, depending upon the requirement.
Oh, and that actually sets up the concept. Now you can have a repetitive process that you can understand it, you can update it, and it creates a continuing conversation, which again, from a law firm's perspective, helps cement that relationship and move you from just being perceived as a high-cost commodity to a strategic input in the process.
I see one more question, and I think I'll go ahead and field it since I was the person who mentioned it in the presentation. That was that it had mentioned the claims analysis or the expert system, and the specific question was around, you mentioned that it had been used as a way to look at attorney development and filings of portfolios. So, the real question is, how did that happen? So, or how does that work? And, so the basics is it's an expert system that was developed, so a piece of software that pulls all of the text from the independent claims, in a patent, application, published, issued, or draft, and then runs it against a series of rules to, again, look at that broadness perspective, and the second area is to look for the quality of the grammar and the punctuation of the rules of the road. And the idea is that you could certainly, as a partner or a supervising attorney, do a one-on-one review of individual patents and mentor or work with junior attorneys or patent agents and the like, or you're looking at even those firms that are doing some LPO work and trying to manage that. It can be challenging. So the idea is that you could actually run this across dozens, hundreds, or all the patent filings that are going through the firm as a way to make sure that you don't have, one, inadvertent errors, and two, you certainly also can reevaluate specific portfolios or specific filings of value. So the example that we used, we actually had a working session with senior partners at a firm, the attorneys who drafted the application, and the end technology lead for the client. And over the course of a day, wordsmithed and recrafted or drafted a series of expanded claims that substantially broadened the potential coverage that the client might obtain if the prosecution results ended favorably. And certainly also caught a few areas where additional definition might be, or support might be desired in the specification just to further strengthen the structural quality of the claim. So it was an interesting exercise that it became one where all the attorneys around the table were able to step back and say, we actually can get a lot of additional potential value for the client here, because we don't ask the patent office for this claim, and start with a narrow claim or start with some problems in it, we're never going to improve our outcome. It only degrades the prosecution process.
Well, it was a little intimidating when I heard about that you were doing that, to say that we were sitting down and sort of on the fly, helping them craft better things. But it's simply the data and the analytics were helping them understand where things could be better. The ultimate legal decision, of course, is for the lawyers. We have to provide the legal advice, but it turned out to be a very cooperative arrangement that benefited all. So, are there any other questions here, Alex? Because I followed up offline because we've certainly taken a big chunk out of the day of people here.
So our contact information is there. Feel free to email us or call us if any questions arise. And back to you, Joe.
And Joe Caruna, to wrap up here.
Yep. Want to thank each of you for attending today's webinar. I'm going to send an individual email to each of the attendees with both a follow-up to get your feedback on the webinar, make sure that it was useful for you, and also with a link to a recorded version of the webinar. The webinar should be up within the next few days. Obviously, you're welcome to share it with your colleagues, and it'll be on demand for at least the next couple of weeks. So I appreciate all the attendance, and we look forward to being in touch. Thank you all, and thank you, Joe and Alex.